Welcome to the Fractional Show. I'm your host, Stella Han, and today I've got the wonderful Avery Washington, who is the founder of the Continental Ground Club here at Fractional. Avery, give us the full rundown. What is this club about? Who are you? And why is this something that people should get their attention on?
Absolutely. So, one, I'm Avery Washington, the manager of Continental Ground. And what the club is about is an opportunity for everyday people to participate in all this development they see happening around them in all these states where there's tons of growth and homes going up left and right. One, sort of a learn while you earn opportunity. And two, just a chance to be a part of it, right? And not just passively watch it happen around you and change your communities.
I love that. And Avery, how did you get into real estate development?
Man, a little bit of an epiphany, slowly and surely through the gateway drug of rental investing. All right, so I started out buying my first home. It was a duplex. A lot of lessons learned came out of that. That led to me eventually being a broker. Then, for some reason, I knew that interest rates wouldn't be next to nothing forever. And I determined if I created inventory, it would yield the same amount as helping people source or buy and sell inventory. And I just kept pulling that thread till I ended up helping turn small forests into neighborhoods.
That's super exciting. And what about your specific market do you feel like really stands out in, how the industry is performing as a whole? Why are
Mhm.
you bullish on your local markets?
Absolutely. A big part of it, honestly, is there's a combination of cost of living, weather, and proximity. These few things. One, in North Carolina in general, it's one of the few states where, say, within, let's say, 5, 6 hour drive, you can be in mountains or on a beach, a major city or the middle of nowhere, pretty reasonable cost of living, with the exception of a very few major metropolitan areas here. Even where I live, where I live and previously lived between Jacksonville and Wilmington, I'm within 30 minutes of three different beaches at nearly all times. And it's still a pretty affordable place, especially compared to many other coastal cities throughout the U.S. So I'd say among those things are big drivers. Plus, I'd say the state's done a good job of attracting job creators, employers. So they're bringing folks here with the jobs being built.
And how does that end up, impacting, let's say, the margins you have on a development?
Hmm.
How does that tie in together?
Absolutely. So realistically, it helps us make sure that the economics that these builders want to see who buy projects in some of the larger ones are consistently putting up new products within our respective market. But on the other end, it also makes sure that you can meaningfully anticipate yesterday's replacement cost to be meaningfully lower than tomorrow or even today's present day market value, right? And the way I like to explain this to folks who don't understand how development works, it's the difference between the cost of all the materials you would purchase or the ingredients to make a cake and how much you could sell a cake for. Huge difference, right? Birthday cake, maybe it's 20, $30. Wedding cake, maybe it's $2, $3,000, right? But eggs, flour, sugar, whatever else you put in it, it didn't cost any more to make it. It's just a matter of determining the appropriate audience that wants it and the value that they place against it.
That I love that analogy you just gave. Like I feel like that just broke it down to be such a no-brainer way to process it. And Avery, inside your club, you've got three very different markets at three
Mm-hmm.
very different scales, right? I saw four duplexes and there's also 500 plus shovel ready units.
Mm-hmm.
Can you break that down for us, right? Like what led you to building a company where you're really playing across the whole spectrum? What led to that decision?
It's funny. I got into development the opposite way most people do. So what I've found often is maybe somebody's wholesaling or flipping. Then they start learning about land. Then they're like, oh, you can do this. You can subdivide it a couple times, right? An oversized lot. And then they're like, well, then they get into major subdivision. I was backwards. I ran across somebody who was a part of major subdivision development. So I learned that first. And then I learned about land flipping. And I was like, oh, you can get this done in less than 3 years? And for not spending hundreds of thousands of dollars at once? How does that work? And then for some, I don't know why, but then it was like, oh, infill lots. You can just do one of these things at a time. And so as that journey went on, I met people that formed good partnerships and were really good, had really good complementary skills. So that's sort of what led me to being involved in everything from doing a relatively large scale mixed use community to doing duplexes, essentially simple subdivision, cranking out 4 duplexes side by side.
I love that. That's incredible. And obviously, with the different scales of each of these projects, how do you see, just timelines being impacted? How do you control that for something, on the smaller side versus something that's, at a much greater scale?
100%. So that's actually a part of why I wanted to offer those 3 things is options for potential participants or club members, because what I've come across quite a bit is you do a project, someone invests in it, and then it's done. And they say, hey, they either just don't want to pay the tax bill. Hey, just roll it over. Hey, just roll it over. Hey, you have anything else going on? That happens a lot. Or they'll say, do you have anything longer term than this? So the way this is designed is each one has a longer time frame, right? So the duplexes, 12 months, the smaller subdivision, the 15 homes, 24, and then the larger one, 36 months. And that's to allow people to make the decision, hey, maybe I want to just continue on and I don't want to bring this on back. So that's a part of it, but I also want to consistently yield the same return and not have to go look for the next thing where I think the leader of the project is capable and it will get me the same terms as the last thing that turned out well. So that was the thought behind it. Give some optionality for folks.
That makes sense. You diversify the portfolio a bit, and then at the same time, I mean, when the operations are working smooth, right? Like even with my end investor hat on, it's like, yeah, we want the capital to be deployed for longer and not taking breaks and in between. So I think that's just a really great hybrid of what you put together inside the club. And Avery, one thing you talked about in terms of how you were able to get, a lot of breadth in what you're working on is finding different partners, right? And you obviously come with a plethora of experience being, wearing a lot of different hats. I'm curious, when you're building your team, what do you feel like is your superpower versus what some of these other team members are bringing to the table?
Absolutely. I would say on my end, there's some pattern recognition, even in things I am not inclined. Like I wouldn't consider myself mechanically inclined, so to speak. But for whatever reason, the way I think, I'll recognize in processes that are beyond my depth. Hey, there's a gap here. This is inefficient. This could have been done in this amount of time or at the same time as these other things. So that helps me just even dealing with the municipalities, right? The counties, the cities, where they say, hey, we need you to do this, and this is this process. And one, maybe from my background, the first question is why? And then after that, once we determine if they even know why, then I'll try to approach it from curiosity. Hey, why can't you do it this way? I'm trying to get this done. And I think that helps a lot, where on the development side, I'm hyper focused on the highest and best use of the site, the constraints that either the zoning ordinance, the environment, the dimensions pose, what there seems to be demand for in the marketplace, the price points that are constraints. For whatever reason, my wheels are just spinning around these things. And then so I essentially, with my builder partner, for the duplexes and the smaller neighborhood, right? I'm able to carry that ball up to where we're submitting the permit applications, and then they jump in and they're submitting that with all the subs and getting the things ordered and managing that part of the process, dealing with the city inspections. So we essentially are each experts in our respective phase. So there's very minimal stepping on one another's toes. We can just move the baton around the track and hand it off cleanly.
That's powerful. That's how you
Hmm.
get the 1 + 1 is greater than two, right? Where you're all experts and
Absolutely.
you've got your superpowers in your domain, and it
Huge
all
difference.
connects to each part together. Avery, I'm curious, like, has there been any, crazy projects or things where maybe the initial plan of how you thought the land would be used was very different from what it turned out to
Ooh.
be, and you've made pivots? What are some of those stories?
Hmm. Sort of, but not entirely. There are two. So there's a project that I'm on the back end of now that it was the first land I ever bought, and I bought it to learn how to do development. I just thought, you know what? You can read about swimming all you want. You show up to a pool, you're going to feel real differently about how knowledgeable you are about swimming. And this project's been running over 5 years at this point, and it's finally about to get put to bed, but I had to sue an HOA to modify their stormwater permit. I had to negotiate with a national builder, and that at the time was my first project. I'm negotiating with the largest national builder. I'll just leave their name out of it for the sake of it, but you're negotiating with the representatives of a publicly traded company, right? So there was everything I thought I could learn and more. I learned out of that. Another one, which is actually one of the sites in this project, is the 13-acre site. So I bought it off the MLS, conducted my due diligence, everything was looking good. I submitted for a minor subdivision, which is 10 total lots. When I submitted, they said, hey, we've already approved this for 16 lots. And I just thought, all right, like what does that mean? Like, so just tell me I can do 16. I don't know. Send me a letter that says I'm approved. And so come to find out, it was already a part of a master plat that was approved in 97 for 16 lots. Already has an existing stormwater permit approved. So this ended up being fast tracked essentially because a bunch of things that were already done at this point decades ago. So that was a pretty pleasant surprise, and those are rare. Despite all the due diligence conducted, I'm glad that that is the way it worked out because it could have been way
Nice.
different. Yeah.
That's a great one.
Hmm.
Amazing. And how many deals are you looking at, before you find the one? Like what's that ratio usually?
Oh man, I I try to slow myself down just because right now I can find way more opportunities than I can afford to take advantage of. So realistically, it's probably about 4 or 5 to 1. And then once I'm task saturated, I'll try to just cut off paying attention to things, or else you're tempting yourself to lean too far over your skis, right? So I've
Yeah.
gotten better about just blocking out any opportunity that may exist, just be leave it unknown to me until I'm ready to leap on it. So yeah, I'd say it's a good 4 or 5 to 1 ratio of what you look at versus what you leap at. Hmm.
That makes a ton of sense. That focus is key. And from a budgeting perspective, right? Like, controlling expenses, margins,
Hmm.
is there any particular thing you really focus on in terms of making sure there's enough room where obviously you're coming in at a good profit and the
Hmm.
investors have their good buffer on their returns as well?
Yeah, absolutely. So I start out with some really simple math, to be honest, and some focus on contingencies. So, because of the way I got into development, I initially started with what are called shovel ready sites, meaning they're fully engineered, permitted, and then you sell it as is with the engineering and permitting complete. That phase of development I consider to be the highest margin, lowest risk phase. So, when I look at a piece of land, if I can't profitably exit it at shovel ready phase, I don't entertain it. And then each succeeding phase, you're taking on additional risk, like you're committing more capital. There's a lower margin, but a higher volume of money. So, because of ensuring that you can exit that first phase, that's the first part of me ensuring at no point is this upside down. The other part of it's due diligence, right? Because it's easy to find 101% problems once you put a shovel in the ground. So making sure that you don't have environmental issues that are going to create big headaches for you and have you upside down in a deal. And the other thing is some simple ratios. When looking at a deal, if at first look, I don't anticipate the ability to acquire the land for no more than a third of what I think I can sell the shovel-ready site for, and no more than, and have an all-in cost for no more than half of what I think I can sell the site for, then I won't even look any further into it. So it has to cleanly double the money that was put out to create it. That way I can ensure that everyone is paid back. I can conservatively offer them a healthy return, and I can not have worked for free for 2 or 3 years all at once.
Very important.
That's hard to sustain.
Yeah. And, with that, I mean, I love how you have a very strict, buy box and underwriting model on what you look for and how you've thought about really de-risking all of that as well. What do you think about in terms of like risk mitigation around timelines, like something going for longer than it needs? How do you address that?
For sure. I would say the biggest thing you can do is keep leverage to a minimum. Right? It's tough. You have an unproductive asset. It's the whole name of the game is creating equity. This is one of the most illiquid things you can involve yourself in. So keeping leverage low as possible, ensuring that your terms make as much sense relative to the revenue generated by the asset, those are the two biggest factors. So if you can defer payments or have minimal payments, that's ideal, right? And if you can have a note where there are no payments, even that's better. And there are maybe terms or constraints that force you to create value and improve the condition of the site constantly. So their subject collateral is being improved over time as well. And knowing how to either refinance it or exit it is important as well, right? So for example, how I talked about the different phases, there are very few buyers of shovel-ready sites, very few. So you have to be prepared for no one to want it. All the builders want finished lots. And that takes a significant capital commitment and a little more time.
Yeah.
But more significant part's capital commitment. So you have to be able to determine before the end of your rope, hey, there's no one biting on a shovel-ready site. People are interested in this market for finished lots. I've got my site work contractor that's going to partner with me to deliver finished lots to a regional national builder, and that allows us to exit on this timeline. We have to commit this much more capital, right? So you just need to come up with good stages to figure those things out. And to be more specific, for example, the first two projects, this isn't necessarily as relevant, but the larger one, the 120-acre site, for example, I have a national builder engaged now. They're willing to purchase shovel-ready lots, but they really want finished lots. The other thing is, because there'll be so much common infrastructure through the site, it'd really be to my benefit to figure out how to give them the finished lots and get the other common infrastructure done at the best cost basis anyone will be capable of achieving with some economies of scale. Right? So as I actively know I've got an end buyer out of the first phase, so to speak, I'm still trying to seek a way to get them closer to what they actually want, so it's easier for them to do business with me again in the future, give me an improved cost basis on all the other things that impact the project, and also looking for a good partner to take it to that next phase if it's determined that has to happen. And at that point, you would essentially refinance into a development loan for doing the horizontal site work and pay out the investors at that point.
Got it.
Mm-hmm.
Wow. I love how methodical you are with just each of the decisions that you make throughout this whole process.
I could,
And obviously, yeah.
well, forgive me for nerding out, but I could try to go into a little more detail also, just regarding that, so people have ideas of the difference in scale, because
Yep.
it's just not a common thing. So, for example, let's say I could sell the paper lots or the shovel ready site for single family homes on that larger project. Let's say I could sell it for 4 million for blanks. And right, that would get me a payday. There'd be a great margin on it. Everybody'd be happy. But to deliver finished lots, the cost will be roughly 40,000 per lot to create it. So now on the lower end, we're talking about spending $8 million to create. Oh Lord, math in public, not my strong suit. To create 12 on the lower end. This is like way lower end. They'll say $12 million worth of gross sales. Right. So now the what was you're doubling the amount that you otherwise were going to have in gross revenue and capital committed, and now your net profit is what your gross revenue was going to be before, and
Yep.
that's on the way lower end of the scale. But just to give a clear image of the shifts that I was talking about between margin but volume of capital, where one is narrowing but the other one is increasing essentially.
Right. It's like you end up getting just a bigger pie in general because of the
Correct.
value creation that you've made. That makes a
Hmm.
ton of sense. And Avery, obviously you've been doing this for a while, and a lot of people have partnered and invested with you in the past. I'm curious, with your strategy and structure, who are the right investors that you're looking for compared to maybe someone that has done more of the traditional single family flips or
Hmm.
multifamily, right? Like, this is very unique that what you're building. Who do you think is the right person to come into the club?
Absolutely. I would say I'm trying to go off of what I've observed because there's a range. I see a good bit of folks who are using retirement funds. They just want to keep it working for them. They don't need it to be really dynamic, and they have 12-month plus timelines. The other thing is someone who's comfortable with it not generating constant revenue, throwing off cash, like getting mailbox money. We're essentially driving toward a singular liquidity event. The other challenge is once you get past site acquisition, it's not a super dynamic thing. You're essentially getting updates about civil engineering and permitting, right? There's nothing to send a picture of. So I think an individual where they don't need to like physically see something is happening, a new picture, the new like hot exciting thing. I don't know how exciting me getting a letter from Onslow County can be to most people, right? So someone who isn't afraid nothing's happening because there isn't a spectacle occurring, if that makes sense.
Yep.
I'd say that person is probably ideal.
That makes a ton of sense. Like,
Hmm.
they don't need the flashy, before and
Hmm.
after pics, but they understand that there's a lot of structural progress that's happening
For
really
sure.
layers much deeper, right?
For sure. And the other thing is, I honestly pride myself in I'm willing to answer any question anyone has to any level of detail they have because I do get this isn't something you learn in school. In most cases, honestly, unless you know someone doing it, you have to pay to go to some course, and not all of it will be applicable ever. It's hyper local or market specific. So I think it's important, right? You should only invest in things you understand. And if I'm trying to get people to invest, I should be willing to help you understand it without charging you money. So that's something that I honestly enjoy, a good sanity check. So we'll talk through it and keep you as informed and educated about what's going on as possible.
That's amazing. And I know early in the podcast, you said one of the things that really resonated with you was creating this club experience where people can learn and earn, right? And I feel like
Hmm.
you just touched on that. Can you just go a little bit deeper for those that are listening? I think that piece is huge,
Hmm.
right? Like this is definitely not a common thing that everyone talks about, right? Compared to
For
your
sure.
fix and flip. That's been out there. People have a good sense of that. Like this is so unique and it's also very deeply complicated, right?
Hmm.
What kind of experience are you really trying to put in place with the club members that want to get that layer deeper with you?
Absolutely. So I think at the end of the day, what I'd like them to walk away with is a better idea of the process at work when they see these new communities or these new construction projects start coming out of the ground. A lot of people don't realize that's years down the road from where it started. There's been years of paperwork and engineering and hearings before anyone put a shovel in the ground. But that's what most people consider development, is when they see trees start to get knocked over. And the other thing is, I think it would make better informed like citizens and community members. Because the other side of it is, especially in Brunswick County, ironically, where one of these sites are, people are really against growth right now. And it's one of the fastest growing counties in the state, and it has been for years. There are employers coming here, there are people moving. So if you don't create housing, you just create a dynamic where housing is guaranteed to be unaffordable. But if people understood the process more, they could help contribute to ways we can facilitate growth more responsibly, right? So there are concerns about wetlands and flash flooding and environmental things and things of that nature. And I've noticed people think developers can just fill in wetlands, or like it does not work that way. You you hope, you just hope there will be little to none, and it won't cut value out of your project. Just to nerd out a little bit. So this process, you have a soil scientist come to your site. They delineate or map the wetlands on the site. Then they work with a surveyor to depict it in a sketch, so to speak, or a survey. That will be sent to the Army Corps of Engineers. The Army Corps of Engineers will then either concur or not concur with their findings, either based on, I think now occasionally they'll do a digital determination, but they still do in person determinations as well. So all of that is being second guessed. And then also, ironically, I've like paid to formally learn more about wetlands. It's not just is there water on the ground or is it mushy? It's a combination of topography, groundwater saturation within a certain distance of the surface, plant types, plant, oh Lord, I'm trying to think of the word. Basically, changes, adaptations in plant species that determine there's high ground. There's a bunch of crazy things. You're basically doing math with plants. It's not just some dude who wants to build a house who decides to put dirt in this wet spot. And if you, and as someone who has had to pay for mitigation banking credits, I can personally attest you will avoid it at all costs. The last time I paid for a banking credit, the cost was $101,000 an acre.
Wow.
It is the least fun thing to pay for ever. Ever. You already own it. So imagine, like, let's say in your backyard. Let's say in your backyard you want to build a shed. And you found out your whole backyard was wetlands, but you can buy a banking credit to build the shed in your backyard to impact the wetlands. And I don't know, let's say your backyard's a quarter acre. So you pay someone 25 grand, and then now your wetlands backyard, now you're allowed to build in it. You already owned it. It's like, it would have been more satisfying if you beat me up and took the money. I would appreciate that. I'd have a cool story. It's like, this
Oh
is the
my
worst shit down
goodness.
ever. Yep. So that
Wow.
people are not trying to just build in wetlands. It's not a thing like people think, but they think it.
That is crazy. I'm getting my mind blown over here. I mean, Avery, you are just such a wealth of knowledge, and I love how every time you say, "Let me just nerd out," and then you just
I
give us the
appreciate it.
whole spiel of everything that happens. And to me, like, I think that is really the type of leaders that we get excited about working with, right? Like, it's more than just the money and the returns, but it's actually really about building your knowledge about how these things work, so that for the people that are really passionate about the strategy, they could even
Mhm.
go do this themselves down the line, right? Like, I feel like that
Interesting,
is
yeah.
what makes this so fantastic. Well, for those tuning in, definitely, if you are curious about what Avery is doing and you want to be a part of the club, reach out to him. We would love to see you on the inside. Avery, any final words for those folks that want in?
I really appreciate your time and thank you for having me today. I look forward to teaching folks everything I know about these projects and development and also learning from people because I guess the point of a team is everyone's bringing the sum of their experiences. So even if you have limited experience in investing or development, you may have a perspective that causes you to ask me questions or consider things that I have not. So I'm appreciative and looking forward to all of it. I'm really excited.
Amazing. Well, Avery, thanks for being on the show. I'm so pumped for your Continental Ground Investment Club. And for everyone tuning in, reach out to us and we'll see you on the inside.
Thank you.